What's going on, YouTube? I am very excited to bring you guys this video today. This is going to be about the biggest SPAC deal in stock market history. Wall Street is not talking about this, but this is a very successful company. They have been in business for over 35 years in my home state of Michigan. So with that being said, they are a cash cow. They pay a 3.5% dividend. And before we get into all the good stuff, the stuff that's going to make your guys' portfolio a lot of money, I have to ask you guys to hit the like button and the subscribe. It helps out the YouTube algorithm push this out to more people so we can help their portfolios as well. So now with that being said, let's get on into the SPAC. The SPAC we're talking about, guys, is Gores Holdings, ticker symbol GHIV. They will be merging with UWM. It is based in Pontiac, Michigan, and UWM is the largest originator of wholesale mortgage loans, residential loans. So basically what they do, they are like a middleman of sorts between the person getting the loan and the person actually holding the loan on their balance sheets. So they're basically the middleman and collect a fee, a percentage. First thing I like to do when I look at a SPAC is I want to know that the company, after it merges, will have good leadership. So let's take a second and look at the CEO of United Wholesale Mortgage, and it is actually United Shores, but it is abbreviated United Wholesale Mortgage. So it was founded in 1986. United Shores, the home to United Wholesale Mortgage, the #1 wholesale mortgage lender in America. Headquartered in Pontiac, Michigan, United Shore employs more than 6,800 team members. So this company was created by Matt Ishba's father, and now he runs the company. He actually ran a bunch of different operations throughout the company. At one point he was the chief executive, and then he at one point was a loan originator, which is actually somebody who does the dirty work and is underwriting loans. So Ishba, he had the chance to be assistant head coach at Cleveland State University at the age of 23, but instead he joined UWM as its 12th employee. In 2013, Ishbia was named CEO of United Wholesale Mortgage and United Shore Financial Services. Now, these couple paragraphs just go on about how they had to keep upgrading buildings to keep up with demand of employees. Now, this says as of September 2020, the company employs over 6,700 team members and has already surpassed its 2019 production record of $107.7 billion and is on pace to end the year close to $200 billion in mortgage volume. Now I want to give you guys some facts about Gores Holdings, some of the companies they have took public, and what this analyst is saying about UWM. So this goes on to say, Gores is no stranger to SPACs. Since 2004, the investment company has been taking companies public and has a solid track record. Hostess and Luminar are among some of the company's recent efforts. At the other side of the deal, UWM is a fast-growing mortgage lender, acting as a disruptor to the stead mortgage industries through its tech-driven approach. The company is the #1 in the country's wholesale segment, a point not lost on JMP analyst Stephen Delaney. It goes on to say, in quotes, UWM is the clear leader in the growing wholesale mortgage origination channel, with the first 9-month 2020 volume of $127.9 billion for a 34.3% market share, with only one other lender, Quicken, at 16.9%, having more than a 7% share. The 5-star analyst said, the stock now has 2 analysts covering it. The first one at Wedbush gives it a buy rating and a $13.50 price target, signaling 8.61% upside. And then JMP Securities also gives this a buy with a $11.50 price target, representing a negative 7.48% downside. And this is where these analysts are wrong. And I plan on coming back to this video and pointing this out. These analysts are very, very wrong. The mortgage sector is red hot. If you can't buy a house right now, people are building houses right now. What do you think is going to happen to those houses that get built? They get loans, and then eventually they'll get sold. On average, a house is sold every 7 years. Somebody will move every 7 years. So with that being said, the mortgage sector will be red hot for a long time. 25% of all money was created and printed in 2020. So that will carry over, along with if Congress passes the Minimum Wage Act and will bring that to $15 an hour, Anybody with real estate now or stocks or anything, especially real estate stock companies, will do very well going forward. Also, I want to throw in here too that the real estate market will do great in the years going ahead. So if you were thinking about getting a mortgage yourself or buying a house, right now is the best opportunity in history, in my opinion. With massive inflation on the horizon, especially with the $15 an hour, people will be able to qualify for more, so your house will be more valuable. It is what it is. Do not listen to people that tell you do not buy real estate. They are wrong. Now, getting into this article about UWM, it says November 6th that they secured $791 million in net proceeds at a 5.5% debt interest rate, which is pretty good. So it says, goes on to say that the company has its best quarter in 34 years last quarter, that it is number one in the wholesale residential mortgage sector for the past 5 years. Now it goes on to say here that ISHBA also announced his intention to recommend that the board of UWMC, which is UWM's ticker once they hit the stock market, adopt a policy of issuing a regular annual dividend of 40 cents per share as part of its capital allocation strategy following the consummation of the business combination with Gores Holdings. He said, in quotes, Mr. Ishba, upon becoming a public company, we intend to continue to manage towards the long term by investing in our business as we always have done in the past. But we also intend to leverage the company's consistent and significant free cash flow to enhance stockholder value creation. This is what I was talking about. UWM, they take a fee for their mortgage originations, and it is a very stable free cash flow machine. So the dividend will be very secure going forward. And at the current stock price at about $12, that means that you will be receiving a 3.5% dividend annualized per year. And with dividends reinvesting, that's where you can really create some significant wealth through this company. Now guys, I want to take you guys over to the balance sheet and get into what Matt Ishba was talking about when he said they have a fortress of a balance sheet. So we're going to get on over to that and start looking at it. So it's cash and cash equivalents of $541,719,000, and keep in mind this was updated June 30th 2020, so it is not completely up to date. Keep in mind from prior in the video, we went over articles saying that they just raised 791 million net proceeds, so that amount would be added to the balance sheet. And as far as the last 6 months, which they did record amount of loans, so that I wouldn't be surprised if they had over $2 billion on their balance sheet. But as far as total assets, it was 426,922,000, and then as far as total liabilities is 15 million. So that is very, very good. That means that they haven't had to raise a lot of debt. So it keeps your equity, one, as shareholders more valuable, and it ultimately gives you a clearer vision of the future. This company is not going to be battling the need to raise capital. If they need to raise capital, they can, and it shouldn't frighten investors because they don't have to. Sort the same as if you were to apply for a bunch of credit cards. People don't like to see that. It's the same concept as far as owning a company and shareholders. Now, I want to get into this article, guys. It says, yeah, after more than doubling its annual revenue in 2019 to over $3 billion and seeing its total mortgage origination volume surge 160% year over year to $107 billion. United Shores appears to have a chance of someday catching Quicken if brokers' share of the mortgage market continues to grow. It says Quicken reported closing $145 billion in loans last year, according to the Detroit News, setting its own company record. It says in quotes, this is from Ishba. It says, I think this year and next year will become the number one, Ishba said in the interview. Quicken's Loans is a great company. They've done a lot of great things. They are very successful, but without a question, I'm very competitive. I won a national championship at Michigan State. We want to be the best. So guys, that is really good to be hearing from the CEO and to be so invested in the company. On to this part too. I think it is pretty important that you guys understand how many shares are outstanding and what that exactly implements going forward with the company. So when everything's said and done, when the merger is done, that they will have 1,605,000,000 shares outstanding. That is a sizable amount, and really what that means, why that is important, the number of shares times the stock price is the flow of the company, or the value of the company. If you did not know, that's what the flow is. Number of shares outstanding times the share price. And what that implements, as far as I'm concerned, going forward, that is a sizable amount of shares. So I do not see them coming out and diluting the shares even further going on. Now, with there being that many shares outstanding, there will take a lot of buy volume to move the stock up and a lot of sell volume to move the stock down. You can kind of think of it like a rocket mortgage, but as far as the articles have been talking about, UWM should grow at a rapid rate because they don't essentially charge as much. They can do a lot more loans, whereas Rocket Mortgage works mostly with people. UWM works mostly with lenders and basically the middleman throughout a transaction. UWM, after all my research and time that I put into researching this company, even before I invested with them, I think it is a great opportunity and a great company to own in your portfolio, especially if you are a dividend investor. Now, going forward, I personally want to get more dividends in my account to take advantage of being younger and having dividends compound for you. So with that being said, I think UWM is a steal at this price, and you should be loading up before the merger. Now, as far as my price targets, I have a price target of after the merger at $15 to $18. I think anything under $15 is a fair price, is a good price, good entry point. So as far as going forward, after that, I think in the next 3 to 5 years, I could see I'm gonna raise it a little bit more. I could see $30 to $35 for this company. That would essentially be 3xing in value and would put the company at around $40 billion of value. I see that is very, very likely. Maybe it goes way higher than that. So you never know. This is a great company though, as I broke down for you guys. I see a lot of potential in it. So that is what I'm doing with my investment. I currently have, I will show you guys on screen now, 100 shares of GHIV at $10.93. I did buy this December 23rd, so I have had it for a while, and I spent $1,092 on this position. Now, I do want to grow this position in the next 2 days to around $1,500. So I'm gonna be looking into that, gonna be buying some shares. So that's what I'm doing. I hope you guys invest wisely and take advantage of such a great opportunity. With that being said, I appreciate you guys watching the video, and if you made it this far, drop a comment down below what you're looking at, what your favorite SPAC or stock is for 2021. I want to get the conversation rolling, and if you are interested in joining a Discord group chat, we have the link down below. You can do that. That is free 99. So with that being said, you guys get out there, go kill it in your portfolios, and I'll see you in the next video. Peace out.